What's going on, everybody? It's Jeff and welcome back to the channel. In today's video, I wanted to talk about the looming 2021 stock market crash that people are asking me about, that writers are writing about, that commentators are inflicting fear on investors. And I kind of just want to go over exactly what history has told us during the transition of a presidency when it's gone from one side to the other. Okay, what's happened, what's occurred over a unified Congress. In this video, I'm going to explain exactly what their policies are, where you're going to want to focus and put your money, and then eventually what signals and policies eventually you're going to want to look for to eventually move your money out. Okay, because eventually there will be a correction. I don't see it happening for the next 12 months, but I'm going to get into it. So stick around. You're not going to want to miss this one. First off, it says right here, stocks historically perform better under a divided Congress. A divided Congress is either when one party holds control of the House and one party holds control of the Senate. Okay, so the Democrats have held control over the House, and now the Democrats also control over the Senate, and that came apparent over the Georgia Senate runoff. Okay, so and obviously we know Biden is a Democrat, so it's a complete unified Congress. A lot of times they say right here, stocks historically perform better under divided Congress, is because that prevents the ability of one party to overcome their policies and their interest to happen so easily. Okay, so we've historically known that Biden and on the left side wants to increase taxes on the rich. However, on the conservative side, they say no, you shouldn't do that. And what that does is it causes for a little bit of friction, which is good because investors like consistency. They don't like any type of abrupt patterns, and they don't like any type of control. Okay, so like I said, this article is good. It came up by Fortune. It says stocks historically perform better under a divided Congress, and it goes into show exactly what it says. A split Congress was positive for stocks. So if you look right here, it says on the Republican Congress, when it was completely controlled by the Republicans, okay, the average S&P went up 13.4. The Democrats was 10.7, but a split Congress was 17.2. So right now we are in control of a Democratic Congress. Now, does that mean it's going to rise less than it has been before? No, because this is over a huge average of time. But let's get into the policies, okay? Because if you really understand exactly what the Democrats, incentives are going to be pushed for, it's going to help you shift exactly where your money's going to, be able to focus on and grow the most. Okay, just like in every aspect, there are certain industries that grow and certain industries that don't grow. So this is an article by the Washington Post. All right, it just gives a brief overview of at least some of their policies, okay, and what some of their interests are. Okay, so if you look right here on top, marijuana legalization. We know the left has always been pro marijuana, the legalization, the production of it, and so forth. Okay, so as you've seen marijuana stocks, and you can even look them up and so forth, they've increased a lot over the past few months, and you can continue to probably see some of them increase. Okay, just like I said, these are just some of them. Climate change. We've talked about the EV stocks in this market. We've talked about their green initiative. Okay, as you can see, gas prices are already being starting to rise as they're anti-fracking, as it causes pollution to potential groundwater, neighboring areas, and the air. So any type of stocks that are going to help in that green initiative, especially look at down here, is also healthcare. They're huge on healthcare. So really understanding, getting to learn what their policies, what they stand for, what they're proactive in, is going to help those is going to make those industries grow. Okay, secondly, we also know that the talks of a $1,400 stimulus, this is going to be huge. Look at the title of this right here, just came out on the 21st. $1,400 stimulus checks will blow up the stock market. Right here, we scroll down a little bit further. I highlighted this one thing. A lot of stimulus checks make their way into stocks. That's for a few reasons. One, now that the stock market is doing absolutely well, everybody and their brother, mother, sister, hairdresser is getting involved in the stock market. This helps put more money into the market, which increases the value of everything. That's one. Two, people cannot, out in Connecticut, restaurants are 50%. They close down at 9:30. There's, a lot of other entertainment is shut down. So it's, what else do we have to do with our money? We as much as people are spending it on adding upgrades to their house and so forth, but this just gives more money available to be able to dump into stocks. In the short term, that's why you're going to see this year, I believe, the market continue to grow and continue to excel. Okay, if you look at right here, the next thing you're going to also want to think about is right now there's 10.6 million people in the United States that have gotten their first dose. We know that Biden has done everything in his power, and they're going to continue to do everything in their power to accelerate this vaccine to come out. So start to think yourself, okay, what's going to benefit when this vaccine eventually comes out? Entertainment, like I just mentioned, restaurants, all those places that have been shut down, Uber, Airbnb, hotels, gaming, gambling, and so forth. Start to think about these stocks. Airlines, cruise lines, once they get some more vaccination, once you hear the news of the CDC starting to say, okay, guys, start getting back out there, help boost this economy. It's, you're going to hear the, being socially isolated was actually not good for a year, and how it's not good mentally and physically for individuals. Once you start to shift that, you're going to see those industries grow. Okay, this is going to happen slowly over the next year. It's going to take a long time for the vaccination to go out, and obviously for these industries start to see a shift. Now, in the contrary, okay, like I said, as I believe this market's going to move 15 to 20%, by the end of this year, eventually when it's going to turn is right here, okay? We've known that, Biden and the Democrats, they do want to raise taxes, especially on high-income households and corporations. Guys, this article is by The Balance. Read this, learn it, understand it, okay? The more you can understand exactly what capital gains are and how these, high-income earners and high-income investors are going to be able to tax, that's when you're going to understand, you'll be able to understand why it affects the market, okay? Right now, bond rates are very low, interest rates are very low, so it's not valuable for these wealthy investors to shift their money over into those funds. So that's why they're keeping it into the market. But right here, raise taxes on high income households and corporations. At the same time, he plans to increase tax credits for many low and moderate income families. When you look at the corporate tax, increases, a lot of these companies, it's not like they're just dumping money and the executives and the CEOs are getting, huge raises with their low tax cuts. They pump that money back into the company, which means buildings, they're getting new roofs on them, they're improving their technology, okay, they're expanding everything, which inevitably feeds down to another company, putting a new roof on it, putting new windows in it, doing technology upgrades. That feeds other companies as well. So all that money kind of turns. Once taxes goes up, it all goes to the government, guys, and it doesn't get turned, okay? Like I said, this isn't probably going to happen until at least a year and a half, because the economy has to recover first. It's taken a huge hit. The unemployment is still high. Okay, so this isn't going to happen I don't think until at least probably the second half of 2022. But keep an eye out for it. As long as you can educate yourself and know, okay, this is what happens historically to the market. This is, when I should start to be able to pull a little bit of my money out. Right now, I have every penny I can scrap besides a few $1,000 in cash on hand to invest it in the market, because that's the number one place to be. Okay. If you look at this too, right here, this article is all about how concerned investors should be about Biden's tax proposal. It shows a little bit the marginal income tax rate, corporate tax rate. However, the taxing long-term capital gains is huge, because that means it would no longer be 15 to 25%. It would go up to 39.6% for the highest income earners. Okay, that's a lot, guys. S&P tax. This is the S&P. Earnings impact based on Biden's proposal. You can expect it to go down close to around 8-9%. I could potentially see it pull back even further. But like I said, guys, I don't see that happening for end of all this year. Don't be afraid. Don't read these articles. Don't be afraid just because the market pulls back, potentially 1,000 points. There's a 5% correction. That's normal. It happens all the time. Ride this wave out, guys. 2021 is going to be a phenomenal year, I believe. Just learn, focus on where your money should be. Don't focus on exactly specific stocks, but also industries. Guys, I hope this helps you out. Don't be afraid. Hit that like button, subscribe, join the family, leave a comment down below, and I'll see you in the next one.